Hello everyone, welcome to e-lecture on the topic Introduction to Income Tax. Today in this session we will discuss on the topic related to income tax. Before we discuss about the income tax, let us see what do you mean by tax, what are the different types of tax, the difference between direct tax and indirect tax, and some of the basic terminology used in the income tax, and finally income tax slabs for the assessment year 2025-26 as per the new and old tax regime. Starting with introduction to tax. So what do you mean by tax? Tax is a mandatory financial charge imposed by the government on individual, business or other entities in order to fund the public services like infrastructure and other government expenditure. Tax is collected by central, state and local government and it is used for the welfare of the society, as I said before, especially for the public services like infrastructure, government expenditure. Types of tax. In tax, mainly there are two types. One is direct tax, another one is indirect tax. Income tax is an example for direct tax, and we have GST, that is goods and service tax, is an example for indirect tax. Direct tax, these are the tax paid directly by the individual or business to the government. Here, the burden of the tax cannot be shifted to others. But indirect tax, name itself give the meaning. These tax are not directly charged to the person, but tax that are collected by intermediaries like sellers from the consumers and paid to the government. Here, the burden of the tax is shifted from the taxpayers to the end consumer. Now let us see the difference between the direct tax and indirect tax. Who pays direct tax and indirect tax? Direct tax is mainly paid by the individual and other business entities. Indirect tax is mainly paid by the consumer through the intermediaries, that is through the sellers or the businessman. Indirect tax burden cannot be shifted to others, but indirect tax, it can be passed on to consumers. As I said before, example for direct tax we have income tax and corporate tax, and for indirect tax we have GST and custom duty. Now introduction to income tax. What do you mean by income tax? Again, name itself give the meaning. Income tax is a tax on income. Income tax is a direct tax imposed by the government on individual or entity's income. Now why the income tax is required? Income tax is required mainly for the government to fund the activities like infrastructure, healthcare and education. Income tax is levied on individuals, HUFs, that is Hindu undivided family, firms and companies based on their earnings. Now let us see the important terminologies used in income tax, starting with assessee. Now the question will arise, who is an assessee? Assessee is any person who is liable to pay tax or any sum of money under the Income Tax Act 1961. Assessee includes individual, Hindu undivided family, that is HUF, companies, firms, AOP, that is association of person, and others who are required to file income tax return. So in simple, assessee is any person who pay tax to the government. Next important terminology used in income tax is assessment year and previous year. These assessment year and previous year is a period of 12 months starting from 1st April and ends with the 31st March. The assessment year is the year in which taxpayers calculate and report their income, deductions and liability to the tax authorities. For example, income earned in the financial year 2024-25, that is previous year, will be assessed in the assessment year 2025-26. Next one is previous year. Again it is a 12 month. The year in which income is earned is known as the previous year. In common man language or layman language, previous year is the current financial year. Again, it starts from 1st April and ends with 31st March. Then there are 5 heads of income. In income tax, all incomes are categorized under 5 heads, that is income from salary, income from house property, income from business or profession, income from capital gain, that is profit from the sale of capital assets like land, shares or gold, and income from other source like the income which are not covered under the above heads are covered under income from other sources. Example like lottery winnings, gift and interest on savings. Next important terminology, gross total income as well as total income. The total of 5 heads of income is called as gross total income, but gross total income is an aggregate of 5 heads before the deduction as per the Income Tax Act. Now question arises, what do you mean by deductions? There are plenty of deductions available as per the Income Tax Act. Deductions from 80C to 80U are available for an individual in order to reduce the taxable income. Deductions like 80C, 80D and 80E, many sections are there. Examples like investment in PPF, that is Public Provident Fund, LIC, health insurance premium, education loan interest, etc. Total income. One more name for total income is taxable income. Total income is the amount obtained after deducting all eligible deductions from gross total income. It is the final taxable income on which tax is calculated. Next one is tax liability. Tax liability refers to the total amount of income tax an assessee is required to pay to the government based on their total income as per the applicable tax slabs and rates. In simple, tax liability is the total amount of tax paid to the government as per the total income or taxable income. Now next important concept, tax regimes in India. In India, as per the Income Tax Act 1961, there are 2 tax regimes are available, that is old tax regime and new tax regime. Old tax regime offers various exemptions and deductions, but new tax regime lower tax rates but fewer deductions only applicable under new tax regime. It is completely an optional, individual can choose any tax regime as per his commitment. Now we will see the very important concept, income tax slabs for the assessment year 2025-26, that is belongs to the previous year 2024-25 as per the old tax regime. Under old tax regime, individuals are categorized into 3 categories. One is normal individual, men and women whose age is less than 60 years. Another one is senior citizen, age between 60 and 80 years, and super senior citizen, age above 80 years. First we will see the tax slab as per the old tax regime for the individual whose age below 60 years. Up to 2,50,000, there is absolutely nil tax rate. That means no need to pay any tax up to income of rupees 2,50,000. Next to 2,50,000 to 5 lakh, 5%, 5 lakhs to 10 lakh, 20%, and 10 lakh and above 30% individual has to pay. There is a rebate or relief under section 87A. Whoever's income is up to 5 lakh rupees, their tax becomes nil. Next, senior citizen, age between 60 and 80 years. Here, up to 3 lakh, they need not pay any tax. 3 lakhs to 5 lakh, 5%. 5 lakhs to 10 lakh, 20%, and 10 lakh and above 30%. And the same rebate or relief under section 87A is available for the income up to rupees 5 lakh. Super senior citizen, age above 80 years. Here, up to 5 lakh, there is no tax. 5 lakhs to 10 lakh, 20%, 10 lakh and above 30%. Here, no rebate is available because income up to 5 lakh rupees is completely exempt for super senior citizen. Next one is income tax slab for the assessment year 2025-26 as per the new tax regime. Here first 3 lakh they need not pay any tax, 3 lakhs to 7 lakh 5%, 7 lakhs to 10 lakh 10%, 10 lakhs to 12 lakh 15%, 12 lakhs to 15 lakh 20%, and 15 lakh and above 30% they have to pay. But there is a rebate or relief under section 87A in new regime available for the income up to rupees 7 lakh. That means income up to 7 lakh rupees, absolutely there is no tax at all. Then surcharge rate. Surcharge means additional tax. It is applicable only for the individual whose income level is high. That means their income is 50 lakhs to 1 crore, 10% extra tax they have to pay, 1 crore to 2 crore 15%, 2 crore to 5 crore 25%, and above 5 crore as per the old tax regime 37% they have to pay, and as per the new tax regime 25% they have to pay. This is already explained. Rebate under section 87A, old regime maximum 12,500 and new regime maximum 25,000 is available. That's it. This is the basic introduction about the income tax. Hope you learned this session. Until we meet again, take care of yourself. Thank you.